Silver almost back to $31, above $30 today, up, percentage-wise. It was a bigger move than gold. Silver stocks, of course, are still well below their 52-week highs, because even though gold made a new all-time high, silver didn't even make a new high from a few weeks ago or a month ago, wherever it hit that level. So silver is still the sleeper, and the silver stocks are very cheap. So over the weekend, there's no reason to wait for a pullback, because you're not going to get any significant pullbacks. I think the risk is that you're waiting for gold and silver to come down, and instead they go way up. And the reason they may go way up next week is the Fed's rate cut. I've been saying for months now that I thought that they were going to cut 50 basis points. In fact, I thought they might have even done an emergency 50 basis point rate cut, but they didn't have to. The Bank of Japan helped out, plus the market started to discount a 50 basis point cut. In fact, the reason the markets were so weak last week, and the reason I titled that podcast that markets were on the brink of a collapse, was because the data that came out last week caused a lot of investors to think that we wouldn't get 50 basis points, that we're only going to get 25. And I think the market needs 50. In fact, they need more than 50. But the Fed needs to show the market that they're serious about cutting rate. And the markets don't want a mamby-pamby 25 basis point cut. They want 50, and they want to know that the Fed has got their back and that it's going to be doing more cuts. Now, this week, what happened is you had a lot of people coming out, even at the Fed, kind of indicating that 50 is still on the table and 50 wouldn't be unrealistic. In fact, a lot of people have come out, big people on Wall Street are now supporting, and they're behind this 50 basis point rate cut. And so I think that the Fed is going to deliver exactly what the market expects. In fact, if they don't get 50 now, if they end up with 25, we could get a big drop. In fact, one of the things that I was concerned about last Friday was the dollar breaking down against the yen. I thought it might break down below 142. And it did. Not only did it break below 142, it closed the week below 141. The dollar yen closed at 140.9. This is the lowest the dollar has been against the yen all year. And the dollar index also was down about 1% on the week. It still hasn't collapsed. It's still above 101. The dollar is still weak, especially against the Swiss franc. It didn't crack 84 cents yet. I mean, that's going to be, I think, a key level. I think it closed around 84.9. We were lower, but dollar recovered a bit. But the dollar has been particularly weak against the Swiss franc. Remember, it's only about 7% above an all-time record low. But we got the weakness in the yen, but it didn't really cause any kind of significant selling in Japanese stocks. I mean, there was an initial maybe 2% drop on Sunday night, but the market kind of recovered. And so by the time we rolled around to our time zone, we were already on the recovery. And then we got all of this 50 basis point stuff that started to, rekindle the hopes that the Fed was going to do 50. And I think that is what caused the rally in the stock market. But it also caused the rally in gold. And this is something that's very significant, too. We'll see where gold is. But gold's making record highs, and the Fed is about to start cutting interest rates. That's never happened. I mean, if you look at the last couple of rate cutting cycles, the most recent one started in 2019, July 31st, 2019, when the Fed cut rates. And then, of course, they eventually went to zero with COVID. But that first rate cut, gold was at $1,412. That was the price of gold, right? Over $1,000 an ounce lower than it is now. But that was still 26% below the record high. The record high was 1920. So gold was way off its highs before the Fed started cutting. If you go back to the cycle before that, which was the September 18th, 2007 cut that preceded the '08 financial crisis, but that was the first cut. At that time, gold was at $726 an ounce. It was 15% below its record high from 1980. The Fed has never started a cutting cycle, at least in modern memory of these cuts, with gold at an all-time record high. And, it's not a coincidence. This is not a coincidence that the Fed keeps easing, causing inflation, printing money, and the price of gold goes up. Now, the question is, how much higher is this easing cycle going to send the price of gold? Because I think this one is going to be the big one.
I've been saying for months now that I thought the Federal Reserve was going to cut 50 basis points. And quite frankly, I was even expecting an emergency rate cut at one point. But they didn't have to pull that trigger because the Bank of Japan and other market forces helped out. The markets started to price in that cut on their own. If you've been watching closely, it's clear that 50 basis points isn't just a target, it's a necessity. In fact, if the Fed doesn't take that action, we might be in for some real turbulence. But here's the critical point. The Fed needs to show that they're serious about rate cuts, and they need to do it in a meaningful way. No half measures here. The market doesn't want a weak, half-hearted 25 basis point cut. It wants a full 50, maybe even more. That's because the market is hungry for certainty, and in this chaotic economic environment, gold and silver are the lifelines that are catching everyone's eye. Think about it. For years, the Federal Reserve has been tiptoeing around inflation, manipulating interest rates, and expanding the money supply like there's no tomorrow. And here's the problem. When they do this, they essentially devalue the dollar, leading to inflationary pressures that hit ordinary people where it hurts the most, their wallets. Inflation isn't just an abstract economic concept. It's something people feel every time they buy groceries, fill up their gas tanks, or pay their bills. The cost of living goes up, but their savings, if they're held in dollars, are worth less and less. That's where gold and silver come into play. These aren't just shiny metals to collect. They're real, tangible assets that hold value when paper currencies, like the dollar, start to falter. There's a reason central banks, especially in emerging markets like China, Russia, and India, are snapping up gold in record amounts. They see the writing on the wall. They know that the era of the US dollar as the global reserve currency is nearing its end. It's like a slow-motion train wreck that everyone sees coming, but no one wants to acknowledge. In the meantime, they're quietly stocking up on gold, preparing for a world where the US dollar might no longer be the go-to currency for international trade and reserves. The current situation reminds me of what happened in the 1970s. Back then, the US dollar was in a precarious position, and inflation was running rampant. It wasn't until the Federal Reserve under Paul Volcker jacked up interest rates to sky-high levels that inflation was finally brought under control. But in the meantime, gold went from $35 an ounce in 1971 to $850 in 1980, a massive increase. It wasn't just speculation driving up the price. It was the realization that the US dollar and paper currencies in general were losing their grip as reliable stores of value. In times of economic crisis, people naturally flock to the safety of gold and silver. Fast forward to today, and we're seeing something eerily similar unfold. The Federal Reserve, once again, is cutting interest rates, and the US dollar is under pressure. But this time, the stakes are even higher. We're entering a rate-cutting cycle with gold already at record highs. That's unprecedented. It shows just how far the US dollar has fallen in terms of real value, and how much confidence has been eroded in fiat currencies in general. This time around, the potential for gold to skyrocket is even greater. In fact, if you've been sitting on the sidelines, waiting for the price of gold to pull back, you might be making a huge mistake. The next leg up could be much bigger than what we've seen so far. Gold is already up 25% on the year, and there's no sign of it slowing down. The Fed's upcoming rate cuts will only add fuel to the fire. But let's not forget about silver. Silver has long been known as the poor man's gold, but don't let that nickname fool you. Silver has massive upside potential, especially when compared to gold. Historically, silver has lagged behind gold in the early stages of a bull market, but once it catches up, it tends to outperform gold in percentage terms. During the last big bull market in silver, which peaked in 2011, the price of silver nearly hit $50 an ounce, while gold was hovering around $1,900. That's a much larger percentage increase than gold. If gold is going to surge in the coming months and years, you can bet that silver will follow suit and perhaps even outperform it. The reason for this is simple. Silver is not just a precious metal, it's also an industrial metal. It's used in everything from electronics to solar panels to electric vehicles. As the world continues its transition to renewable energy and high-tech industries, the demand for silver is going to skyrocket.
So let me get back to today's podcast. I started talking about gold and the fact that gold hit a new record high pretty much every day this week. And it closed at a new closing high for a day, for a week. Gold closed, I believe the settlement price was $2,500 No, 2,578. Although that could change. I'm recording this about 5 o'clock East Coast time, so sometimes they end up changing the price a bit. But that was where it was the last that I looked. The high of the day, intraday, that I saw was 2,583, maybe a little bit above that. So that is the new all-time record high for the price of gold. Gold is now up 25% on the year. That's a big year, and the year's not even over yet. Now, let's contrast that to what's going on in the stock market, because a lot of people are talking about, stock market's really strong, and it has been strong if you measure it in dollars, U.S. paper currency. So the Dow was up 2.1% on the week. Now, if you just heard that, oh, that's a good week, Dow was up 2.1%. Gold was up 3.2%. So that means in terms of gold, priced in gold, the Dow was down. Even the S&P, which rose 3.1% on the week. In gold terms, it was actually lower. My last podcast, I talked about the fact that 2,500 was probably the new floor, that we could go slightly below it. And I think the lowest we got, ever since we got above 2,500, the lowest we got was about 2,480. And here we are now $100 higher at 2,580, when gold had a 1% decline from its highs. It went from 2,530 to like 2,480. Gold stocks got clobbered. The GDXJ was down 15%. And so this week, it recouped all of those losses. But the indexes are still extremely cheap. And I still think that people should be buying these stocks as fast as they can come Monday morning, regardless of where they are. Obviously, you need to be a speculator. There's risk in these stocks. But as far as I'm concerned, they may as well be giving them away in Cracker Jack boxes. That's how cheap they are. Still going up. Silver almost back to $31, above $30 today, up, percentage-wise. It was a bigger move than gold. Silver stocks, of course, are still well below their 52-week highs, because even though gold made a new all-time high, silver didn't even make a new high from a few weeks ago or a month ago, wherever it hit that level. So silver is still the sleeper, and the silver stocks are very cheap. So over the weekend, there's no reason to wait for a pullback, because you're not going to get any significant pullbacks. I think the risk is that you're waiting for gold and silver to come down, and instead they go way up. And the reason they may go way up next week is the Fed's rate cut.
Now you might be thinking, is it too late to get into gold and silver? After all, gold is already at record highs, and silver has been climbing steadily as well. But here's the thing, we're still in the early stages of this bull market. The Federal Reserve has just started cutting rates, and inflation is still a looming threat. As more investors wake up to the reality that the US dollar is losing value, they will flock to gold and silver, driving prices even higher. There's also the question of what central banks will do. Central banks are the biggest players in the gold market right now, and they're buying up gold at a record pace. Why? Because they know what's coming. They know that the days of the US dollar as the world's reserve currency are numbered, and they're preparing for a world where gold plays a much larger role in the global financial system. We're already seeing signs of this shift. China, for example, has been quietly increasing its gold reserves for years. Russia, too, has been a major buyer of gold. These countries are positioning themselves for a post-dollar world, and they're doing it by accumulating gold. When the US dollar eventually loses its status as the global reserve currency, gold will be the asset that replaces it. And when that happens, the price of gold could easily skyrocket to $5,000 an ounce, or even higher. Let's dive deeper into the potential for gold and silver to soar, especially in light of the upcoming Fed rate cuts. Many market participants are banking on a 50 basis point cut, but if the Fed only delivers 25, we could see a sharp sell-off in the stock market. Investors have been counting on more aggressive action from the Fed to prop up the economy, and anything less might lead to panic selling. However, while the stock market teeters on the edge, gold has been quietly making new highs. This week alone, gold hit a new record high nearly every day. By the end of the week, gold was up 25% for the year. That's a massive gain, especially when you compare it to the performance of the stock market. Now let's contrast this with the stock market. Sure, the Dow Jones was up 2.1% last week, but gold was up 3.2%. In gold terms, the Dow actually lost value. And this is the key point. As the dollar weakens, gold becomes stronger. While your stocks may look good on paper, When priced in real money, gold, they're losing value. What's happening here is simple. The dollar is losing its purchasing power, and investors are starting to wake up to this reality. As inflation rises and the Fed continues to cut rates, the value of the dollar will keep declining. In contrast, gold and silver are real stores of value that can't be printed at will by central banks. This is why central banks themselves have been buying gold at record levels. They know what's coming. China, for instance, has been steadily increasing its gold reserves, and so has Russia. These countries are preparing for a world where the US dollar is no longer the world's reserve currency. When that day comes, gold will be the ultimate reserve asset, and countries that hold large amounts of it will have a significant advantage. If you think this is far-fetched, consider what happened in 1971 when the US went off the gold standard. At that moment, the dollar was no longer backed by gold, and it started to lose value against other currencies. Gold, on the other hand, began its long climb to $850 by 1980. Now imagine what will happen when the world collectively decides to move away from the dollar as the reserve currency and back to gold. The price of gold could easily skyrocket to $5,000 or even higher. But what about silver? Well, silver often lags behind gold in the early stages of a bull market, but once it starts moving, the gains can be explosive. In 2011, silver hit nearly $50 an ounce, and it could easily do that again, especially with rising industrial demand and increasing investor interest. One of the biggest drivers of silver's future price increases will be its use in technology. Silver is an essential component in everything from solar panels to electric vehicles. As the world continues to transition to greener technologies, demand for silver will skyrocket. And with limited supply, it's only a matter of time before the price catches up to demand. Now, some of you may be wondering whether it's too late to get into gold and silver. After all, gold is already at record highs and silver has been creeping up as well. But here's the thing, we're still in the early stages of this bull market. The Fed has just started cutting rates and inflation is still a major concern. As more investors realize that the dollar is losing value and turn to gold and silver, the prices of these metals will continue to rise. There's also the geopolitical risk to consider. With tensions rising between major powers like the US, China, and Russia, the world is becoming an increasingly uncertain place. Gold and silver offer protection during times of geopolitical instability. They are assets that have stood the test of time and have been used as stores of value for thousands of years. Inflation isn't going away anytime soon either. While the Fed may claim that it has inflation under control, anyone who does their own grocery shopping knows that prices are still rising. Inflation erodes the purchasing power of your dollars, but it has the opposite effect on gold and silver. As inflation rises, so does the value of precious metals, making them one of the best hedges against inflation. And don't forget about the central banks. They are the biggest players in the gold market right now, buying up gold at a pace we haven't seen in decades. They know what's coming, and they're preparing for a world where gold plays a much larger role in the global financial system. If you're still hesitant about getting into gold and silver, now is the time to act. The upside potential is enormous, and the downside risk is minimal compared to other asset classes. Whether it's inflation, geopolitical risks, or currency devaluation, gold and silver offer protection that other assets simply can't provide. In conclusion, gold and silver are the assets you want to own in today's uncertain world. With the Fed cutting rates, inflation rising, and central banks hoarding gold, the writing is on the wall. Gold and silver prices are going higher, and if you don't get in now, you might miss out on one of the best investment opportunities of your lifetime.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.